Hi everyone, it's Luke from Jettle here. Today we're going to be running through the key areas of finance within business studies. But before we begin, make sure to subscribe so you don't miss out on any of our new content. So the fundamental aspect of finance within business studies is matching the source of finance to the purpose of its use, okay? It's really important to use a short-term source for a short-term objective or a short-term initiative. There's no point on using a long-term mortgage to buy some additional inventory because the realization of the inventory is not going to time accurately with the length of the mortgage. Similarly, you're not going to use an overdraft for a long-term large property purchase because once again, the timing does not match. And this is really important within both short answers and the business report because a lot of the time you have to calculate and comment or recommend a use of a financial strategy, especially within the business report. The marker is looking for the best available strategy. So you need to ensure in that 5 minutes of planning time you have in an exam that you're able to look at the financial information, assess the issue that the business is facing, and recommend the best possible strategy. And that is a key area of finance. And there'll be at least 10 marks in every HSC exam, which is related to appropriate recommendations within finance. Another key area, especially within multiple choice and short answers, is the financial statement. It takes up a large portion of financial processes and understanding where different components of the financial statement sit, especially within the balance sheet, understanding what falls under a non-current asset, what falls under a current liability, because ratio interpretation and then applying that interpretation, as we mentioned, is so crucial within finance. And a common trend within a lot of papers is maybe the last two multiple choice questions are difficult finance questions that require you to piece together information and almost construct a balance sheet and then comment on it. And as we mentioned, being able to interpret these financial ratios is so crucial. It's not only good to just calculate the ratios, it's really important to be able to provide an accurate comment. There's almost every short answer section within finance has financial information and then at least 2 marks of comment on the gearing ratio of this business or comment on the liquidity ratio of this business. So it's really important you understand what each ratio means and what's the ideal figure for each ratio. What liquidity ratio should we be aiming to maintain? Say we have too high of a liquidity ratio. What does that mean? If our liquidity ratio is 3-1, maybe it means we're not using our cash effectively. And we should be investing that cash in long-term assets in order to improve long-term profitability. But interpreting these ratios, understanding what is the ideal figures is really important in both multiple choice, short answer, and in some cases, the business report. And as we mentioned, the fundamental aspect of finance is recommending the most relevant strategy based on the information you've been provided. Understanding how to rectify a liquidity issue or how to rectify a gearing issue, or if efficiency is poor, how can this be improved through strategies? Because within the business report especially, you're regularly asked to recommend a financial strategy which can improve this business's gearing position. And the marker will specifically look whether you've recommended a relevant and helpful strategy. Because you can recommend any strategy and you can provide reasons for it, but the strategy that's going to receive the most marks is the one that's relevant, has very crucial information, and shows tangible effects that are going to improve the business's position. So here we have a multiple choice question which links to matching the source of the finance to their benefits and disadvantages. If you want to have a go, pause this video and come back to it. Which of the following is a disadvantage of debt financing? Is it A, funds are readily available? And that's not a disadvantage, that would be an advantage. All right? If you can immediately receive funds, you can immediately put them into action through an investment or through purchasing stock. So that's an advantage, it's not a disadvantage. B, interest payments are tax deductible. Obviously, once again, that's not a disadvantage, that's an advantage. A tax deduction is going to improve your profitability, it's going to reduce your tax bill at the end of the financial year, which is a positive. C, security is required by the business. This sounds like a disadvantage, okay? So that's sounding like our answer. And D, it is limited to large corporations, which if we know our syllabus, if we know our information, that's incorrect. Anyone from a small business up to a large corporation has access to debt financing. So that's not applicable here. So the answer through our process of elimination is C. Security is required by the business, which is a disadvantage because if you're unable to repay that loan based on unexpected financial circumstances. The asset which you've used to secure that loan is going to be repossessed by a bank or whoever's provided that debt finance, which is a huge negative, especially if it's a crucial asset for you. And here I'm going to break down a 2-mark short answer question based on what we were talking about earlier, how to recommend a strategy based off financial information. So the question here is, outline one strategy Ezekiel Foods could use to improve their working capital, which we know is liquidity. Okay, so here we provide, which is the current ratio of 2 to 1. Okay, the directive term is outline, sketch in general terms. And it's only 2 marks. You had 4 lines to do this response, so it's brief, succinct, and specific. EF can employ a sale and leaseback strategy for any large non-current assets in order to provide a substantial cash injection. Immediately we answer the question, a sale and leaseback strategy, and then we go into describing how that would be performed for any large non-current assets, and it will provide a substantial cash injection. That's layered in one sentence. We've named our strategy, how it's performed, and the benefits it will provide, and then the effect of that. By selling a non-current asset such as land or building, EF can utilize the cash received from the sale to service current liabilities and improve their current ratio position. So in 2 sentences, we've been able to name our strategy, explain it, the benefit it provides, and then link it directly to the business based off the information we've been provided. And that's the level of succinct and specific writing which you'd want to achieve by the HSC so that you can maximize the time you can spend on your extended response and business report and breeze through those short answers and do them efficiently and not waste too much time on these small mark questions. Thanks for watching. If you enjoyed the video, make sure you like, comment, and subscribe. If you enjoy our resources, make sure to check out jedl.com, and I'll see you in the next video.